The Indian economy is on the verge of a fresh trajectory of growth. The recovery since the fourth wave or the third wave in January has been quick, it has been sharp. We have seen an improvement on all fronts in macroeconomic indicators, in high-frequency indicators as well, and in general demand in certain sectors which were lagging behind, especially like tourism and hospitality. But it's not as if it's all rosy, scenarios on the horizon, because we also have a geopolitical situation which threatens to topple this growth trajectory. I'm, of course, speaking about what's happening between Russia and Ukraine and impacting one of the most crucial imports of India, which is crude. We're now battling the prospects of high inflation and maybe growth that hasn't really caught up. So what will be the outlook ahead? To speak on this, I'm joined today by a very special guest. I'm speaking with Mr. Arvind Panagariya. He's a professor at the Columbia University and the first VC of the Niti Aayog. Mr. Panagariya, great to speak with you again. A pleasure as always. Let me begin with your overview on where India is positioned right now. I summarized it very briefly in our introduction, but would you say that there are more headwinds we're facing right now rather than tailwinds?
Okay, so we have been coming out of the COVID crisis quite strongly, and the recovery in the fiscal year that has just ended has been quite impressive. You can compare it with other countries. You can compare it with how we had been doing prior to the crisis and so forth. So that recovery has been solid. Balance sheets are in significantly better shape for both corporations and the banks. But as you have already pointed out, the headwinds are there now. There have been two things that we need to watch out for. One is the oil price increase that you have mentioned already in the wake of the Russia-Ukraine war. And the second is the prospect of rising interest rates in the United States, which inevitably attracts capital back from where it had gone before, which means that, from emerging markets, capital that had come into the emerging markets in the earlier years will have a tendency to rush back. We are seeing that process also on. So clearly, particularly the Reserve Bank of India's work is cut out here. I think they need to respond it. The right instrument to use right now is the exchange rate. This is a shock that has happened externally, and therefore what we need is to support our exports and also provide some ability to compete against imports, because the immediate impact of these things is going to be on the current account, and the way to combat it is through the exchange rate, so that we encourage more exports and can provide some cushion against the imports to domestic production through the exchange rate. So that is, I think, the primary instrument that the Reserve Bank of India will have to use.
That is the primary instrument, but Mr. Panagariya, there is a very real and valid concern on how India is going to deal with this energy shock. Crude prices, we're already seeing the uptick at the fuel pump with petrol and diesel prices. 12 hikes in the last 14 days, no signs of stopping over there. LPG prices have gone up, gas prices have gone up, and one wonders what is going to be the impact finally of all of this. Do you think that we're stretching it a little thin when it comes to our inflation tolerance?
I'm less worried. I think we will be able to deal with the inflation side of it, for the reason that, our problem is not what is the problem of many of the other countries, particularly the European countries and the United States. Because these countries had expanded the fiscal just beyond imagination, I would say. It's just incredible fiscal expansion, which is now leading to very large increases in the expenditures as the economies are opening up and people are able to go out and spend. We did not do that. So I think on that side, our worry is less serious. It is still the supply side factors which are still there and exacerbated now by the fact of oil price shock. But it is something we can deal with. I think on that side, the RBI, on monetary policy, it has been generally, I would say I'm with it. Because we are at about 6% currently, and I don't think there is need for us to panic on that front. I think it's a greater problem in the US here, where I see that the inflation looks much more entrenched. So that will deal with a specific price increase of oil. Yes, that is going to be a bit of a hardship for transportation industry and for, of course, consumers as well, because a large number of our urban folks now drive cars or are dependent on petrol dependent transportation, and transportation was also one of the sectors that really got the big hit during the pandemic. So that is one sector to watch out on. Maybe if there is fiscal space that the government can create, then some adjustment in the excise taxes could be used to soften the blow a bit.
The question is, how are we going to face up to challenges for solutions that we were beginning to look at? For example, a lot of hope's pinned on the LIC IPO, right? To augment the government balance sheet. Now that has been postponed because of how global markets have been responding. What do we do about that? Exports were finally looking good, and Indian exports have seen, I think, their best flush in the last 8 months or so. But your deficit, your trade deficit is again going out of whack because of crude prices. So what really are the tools in hand to combat these external situations and shocks?
Right. So this is precisely, Tamanna, where I was emphasizing the role of the exchange rate. I think this is a time where the Reserve Bank of India can let the rupee depreciate a bit. And the pressures are there, both in terms of the outflow of dollars out of the country, as well as in terms of the oil price increase. So that is the primary instrument I think the Reserve Bank of India will need to use. And as far as revenues are concerned, as you mentioned about the LIC IPO being postponed, on that, the government really doesn't have a way out. If LIC gets postponed, the other privatizations got to proceed because, fiscal cannot be allowed to go out of control. And also remember that the tax for the longer term, this is more of a longer term solution, that the tax base needs to be continuously broadened. GST is doing well. I think the revenues on that front have done quite well, but one needs to still, that's not enough. So the GST tax base needs to be broadened, but that's a more longer term solution. The shorter term privatization, I think, is the primary tool. So also the asset monetization has to really pick up even faster. These are all efficiency enhancing instruments as well. So privatization also increases efficiency. We should also go to the banks. Bank privatization has to be, now the account has to be opened on that front as well. So primarily, the government will need to be more aggressive on privatization, but other reforms as well. Free trade agreements are being signed. That is a very good sign. We have done two, UAE and Australia. That's all very good news, but we have to proceed on that front. So the signals have to continue to be coming from the government, that the government is determined to continue to improve efficiency of the economy.
I want to sort of spread the net on the scope of our conversation. We've been talking about the impact on the Indian economy, what we're seeing geopolitically. But let's turn our attention of what's happening in our neighborhood in Sri Lanka, which is the shocker, because the speed with which that economy has collapsed is astounding. And there was a report recently on warnings that the kind of freebies and welfare schemes that Indian states have been announcing pre-polls and now will presumably have to act upon can lead to that kind of a situation here as well. Just your comments on what is happening in Sri Lanka and lessons for us and others in the region.
I want to sort of split the answer a little bit into two different things. One is the issue of subsidies. I think we do need to to be careful on that front. We particularly, where subsidies happen to have been relatively regressive, meaning, they end up in the hands of the richer households. We certainly should really try to roll those back. I certainly think that if we are going to derive some sort of a lesson from Sri Lanka, we ought to do that. But, even quite apart from what happened in Sri Lanka, that is something in our interest, and for FISC, which is really under pressure currently, that is something we ought to look at. But do I panic because of what has happened in Sri Lanka? No, there is no parallel here.
Yeah.
Sri Lanka had been mismanaged very, very badly, and both politically and economically, I should say. We don't have that kind of mismanagement either on the political side or on the economic side. The government has done, actually, in my opinion, terrific job of managing the economy through the crisis of COVID. And it has also, to me, handled the diplomatic side, etc., very, very well in the current Ukraine-Russia conflict as well. So we are not into that kind of mismanagement here in India. So I won't worry at all about that side of what has happened in Sri Lanka.
So let's talk a bit about what has exactly happened in Sri Lanka, where we've seen sort of very high inflation. They've just run out of foreign currency to even buy essentials. How does the neighboring country come back from here?
Yeah, well, look, Taman, on this, first, the politics has to sort itself out. At the end of the day, economics cannot be sorted out without politics being sorted out. So it is the two things interacting right now. And first of all, the political stability has to be there. There has to be a responsible government which takes the responsible actions. Too much irresponsible expenditures were done. Perhaps the central bank mismanaged as well. So, this has been mismanagement all around. But you can't sort it out without sorting out first the political side of the problem.
Okay. Let's just turn our attention back to the outlook. So one of the, I would say, two indicators which India has been seeing a bit of a struggle, bit of a challenge on in the last many quarters. And these are endemic, sort of problems which worsened during COVID-19. One would be consumption and the kind of demand that we need to see from consumers. And the other is the scale and speed of private investment. Do you see signs of this improving or worsening right now?
Oh, I feel on both fronts, now we should see improvements. We have already talked about, the two headwinds that are on the way. So that's something to be kept in mind. But apart from that, now the confidence is back, and the private consumption will pick up. I mean, I'm very confident that we will see a recovery on that front as well. On other fronts, recovery has been observed already in the latest fiscal year that has ended as well. So on private investment, again, we should see even yet, we are already well above the pre-pandemic level of gross investment, which includes private investment, but we'll see yet further recovery for the reason that, finally the corporate balance sheets are in good shape. The public sector banks also have at least now recovered to considerable degree. It's not over. I think, NPAs are still there in fairly significant volume, but they are being cleared. And there's been some decline in the NPAs. So both of those factors, which were critical actually in the decline in the private investment, have now seen recovery and a solution. So we should see continued recovery. I shouldn't say that we should see recovery, but it's continued recovery in private investment as well. That doesn't mean that the government should ease up on its capital expenditures. I think the government still will need to continue with its capital expenditures, meaning largely on infrastructure. that part has to continue. And as more data come in and we see what is happening to private investment and private consumption demand, based on that, the government will have to continuously kind of recalibrate its fiscal, meaning expenditures, both current and capital expenditures, will have to be recalibrated based on what the information, what the data say on private consumption as well as investment recovery.
Let me get specific on rural demand, because one of the key indicators of rural demand is the kind of commentary that comes in from FMCG majors. And they are quite clear that there are warning signs there. There is a bit of trouble because they have consistently had to pass on price increases. Price increases are now being passed out on at all levels, in all categories. And they are seeing and they are fearing an impact on demand, especially in Q4. What do you think can be done to buffer up rural demand at this point? Do we need to come back to tried and tested tools like Narega?
Well, remember that Narega is a flexible instrument in any case. And the government has said it is committed to increasing the Narega expenditures if there is demand, right? So it is a demand-driven program. And if there is greater demand because of weakness in the rural economy, the government will and should increase the Narega expenditures. And that is our primary instrument actually to deal with the demand in the rural areas. Look, we have to also take what the industry, FMCG industry itself says about the rural demand and all. It is in their interest to raise those red flags so as to get the government to actually act preemptively. I wouldn't go by that, but I would go by, what the rural demand for labor itself is telling you. If more people do actually show up for Narega employment, then by all means, the government ought to increase that expenditure.
Bit more on the rate at which price hikes are being passed on. I mean, you pick up any category, whether it's real estate, FMCG products, services, cars, anything. And now finally, manufacturers are saying that we can no longer hold on. We need to start passing on these price increases and these high input cost prices. What do you think the impact of this is going to have on consumption? Are there concerns there?
Well, look, I mean, manufacturers, whatever they may be saying, if their costs rise, they do pass on the increases in prices. It's not like they are saying it today and they will do it tomorrow. If their costs are rising, they are already passing on those increases in the prices. But I don't see that ultimately, when I look at the overall inflation rate, it's not like it has spiked in any way. It was a little below 6%. Now it's a tiny bit above 6%. So I don't see the impact of that necessarily so far in inflation having suddenly spiked. For individual, ultimately, look, we have to look at the overall inflation rate. Which is what I'm focusing on. And some, now anecdotal stories may come in from some specific products, but then one has to look at what is the weight of those products in the consumer basket, which defines the CPI, the Consumer Price Index. Ultimately, what happens is that all sorts of noises get made in the system. But one has to filter those noises and see what is the overall weight and impact of those noises. And so far as I see it, not a huge impact on inflation. The RBI does need to watch out, there's no question, because it's right now already at 6%, which is the upper limit of its inflation target. So, but at the same time, the economy also has to recover, continue its recovery. And so it has to be cautious in acting preemptively. Become very if it preemptively becomes contractionary, then it can also scuttle the recovery. So it's a sort of, looking at the data as they come in and fine-tuning the policy. Certainly our macro policies currently are not in any big way out of whack. So I understand all the concerns you are raising, but one has to separate out the noise and what the signal of that noise is. And I'm just saying that, look, at the end of the day, individual noises that are coming would always come from the industry, but one has to look at the aggregate impact of that.
So, where do you stand on this entire debate of what India should do and what the government should do about passing on these high crude prices? I mean, we didn't see any increase in pump prices from November, and we were in the spate of all of these state elections. Then after that, we've seen these consistent increase in prices. Now, there's one school of thought that thinks that the government should just cut excise duties further and pass on some relief. Do you think that's the way forward, or should we now say transparently, since this is supposed to be an open system linked to global market prices, then the Indian consumer will have to bear the brunt?
Well, somewhere in between. I think, those are two extremes, somewhere in between, meaning that, some cushioning can be done, but at the same time, you can't go too far with that, because ultimately the government also has to run itself, and for that it needs the revenues. And remember that, as regards the indirect taxes, the energy taxes are a very large component of our indirect taxes. So you can't completely let that go. And remember also the issues of states here. States also tax petrol. And ultimately it can, when you get into this tax cutting game to keep the petrol prices low, it will also come to the states, and then the states' budgets will begin to get out of balance. So one needs to do the fine walk. At present, whatever changes have happened already are in place, and hopefully, now whatever movement that happens in the oil prices, hopefully will be on the reduction. It's already extremely high, so I'll wait and watch.
Do you think we should buy cheaper Russian oil right now, even with the kind of pressure we're seeing from US and NATO countries?
Well, absolutely, we should. I mean, what is Germany doing? Germany is buying a lot of other European countries who are NATO members. Yeah. If they can do it, why can't we? On that front, I see absolutely no reason for us to back out. I think this kind of moralizing will continue to happen from the Western countries, but that's completely hypocritical. I just don't see the Western Europeans stopping to import gas and oil from Russia. Large number of companies actually within places like the Netherlands, etc., are buying enormous amounts of crude from Russia, which they then refine. So there is no, personally, I don't feel at all apologetic about this. At the end of the day, national interest has to trump everything else. And if Russia gives us cheaper oil, yes, we should buy it.
Okay, on that note, I want to thank you once more, Mr. Panagriya, for joining us on this special show today with your outlook, which continues to be positive on the Indian economy.
Thank you. Glad to be with you, Tamanna. Thanks.
Thank you, sir.